Ignite your curiosity with Austin Next. We're watching Austin transform from a thriving ecosystem into a global superstar. With our host, Jason Scharf, we aspire to better comprehend the true nature of innovation. Together, we will uncover what makes a successful ecosystem and navigate the technologies shaping our future. Now let's dive into what's next.
Today's podcast is sponsored by Austin Private Wealth, a registered investment advisor focused on fee-only financial planning and investment management. Their mission is to serve affluent clients with personalized financial advice, fostering a trusted relationship that will endure for generations to come. Austin Private Wealth is not just about managing wealth. They're about inspiring you to embrace a future filled with possibilities and helping you architect enduring legacies. Their core values of integrity, service, caring, excellence, and growth are at the heart of everything they do. Connect with them today at austinprivatewealth.com.
Austin Private Wealth is a registered investment advisor. Advisory services are only offered to clients or prospective clients where Austin Private Wealth and its representatives are properly licensed or exempt from licensure. No advice may be rendered by Austin Private Wealth unless a client service agreement is in place. Investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional.
Austin is adapting to and building the future in real time. I'm Michael Scharf. We are exploring and driving our transformation into the next innovation powerhouse.
I'm Jason Scharf. I'm a bioresearcher at UT to the assembly line worker at Tesla, from the musician on 6th Street to the coder at Dell. And with the founders, funders, and early employees at the next great startup, we are all Austin Next. The fuel that makes startups grow has always been capital. This is produced from revenue, debt, angels, crowdfunding, and venture capital. 2020 was a historic year for venture financing in Austin. We're just getting started. We smashed that record in the first 6 months of 2021. Not only that, but over the last 18 months, we've seen an influx of VC firms moving here and others raising fresh funds. In this episode, we're starting our series on the Austin capital environment, how it's evolved, where the funding is being deployed, and what the future holds. Today, we begin that exploration with longtime local VC Brian Smith, the founder and managing director of S3 Ventures. S3 has been investing for over 15 years and has $600 million under management. At 29, Brian founded and served as chairman and CEO of Crossroads Systems. He led Crossroads through 5 rounds of financing and to a successful IPO in 1999. Brian ran Crossroads as a public company for nearly 4 years. Through his work, he served on a dozen boards and currently sits on the boards of Alchemy, Liquibase, Seranus, Solus Therapeutics, Tango Health, and VUV Analytics. Welcome, Brian, to the Austin Next podcast.
Great, Jason. Good to be here.
Well, let's talk about how you got started in this. When you made the transition from Crossroads to S3, why did you do that and how did it work?
Yeah, it's a great question. I had been, as Jason mentioned, running the public company and had done some angel investing in the background. And the question really came, do I want to do another startup after having left the public company, or did I want to help others build companies? And so it was really a growth out of that question that I answered, that I was looking forward to helping others build companies. And so began to move in that direction, learned a lot and made a lot of mistakes in angel investing, and then started S3 from there with a great limited partner and have built it ever since.
So tell us a little bit more about S3 Ventures. What's your investment thesis, and talk about some of your great exits?
Yeah, glad to. So we are the largest venture firm in Texas focused on Texas, and we do investments in the seed Series A and what we would call a Texas Series B round. Some of these Series Bs are getting awfully big these days. We're typically doing 5 to 6 new deals a year, and we're probably putting, call it 30 to 50 million of capital to work a year. Our investment areas are primarily in software and in healthcare, and then we do some digital experiences as well. We're very patient in our capital deployment. We're trying to find great investments to make, implement our true resources. We talk about true resources that we bring to bear. And we're looking for big impacts. A lot of times we talk about improving the human condition. Sometimes that's a little bit harder to see in software, but in med tech and in healthcare, we are trying to make the human condition better. So we're looking at SaaS, kind of software businesses. We're looking at healthcare IT. We're looking at med tech, digital experiences. So those are some of the areas that we're focusing on here in Texas.
How about exits?
So on the exit side, we've had a number of them. Some great ones that I would consider Alchemy Technology. We did the Series A investment in that in 2011, and they went public this year in April on the NASDAQ, which was very exciting. And we had a great company called Favor that some of our Texans friends are familiar with that HEB bought in 2018. And the medical side, TVA Medical, which creates a fistula for access to the blood. That was a company that Becton Dickinson bought in 2018. And then more recently, a women's health company called Acessa Health, led by Kim Rodriguez, great company. That was bought by Hologic in 2020. And then a few others to round that out. We sold two companies to IBM, both in the software area, StoredIQ and Graviton. And then recently, Live Oak was purchased by DocuSign. And so those are some of the great ones. Order of magnitude, we're making 4, 5, 6 times. And then with Alchemy, it's well over 11 times kind of return. So we're very happy with those great exits.
Yeah, I can see why. From an outsider perspective, somebody just coming into Austin, the VC community here has historically been dominated by a few firms, obviously including Austin Ventures. And in 2015, Austin Ventures folded. Now, in other ecosystems, losing an anchor like that has some really negative ripple effects across the region. But in Austin, at least, it looks like the opposite occurred. We have several Austin Ventures alumni starting firms, and the vacuum was filled by both new local firms and venture capital companies moving here. What made this an accelerator event, and why was the folding of Austin Ventures 6 years ago more of a good thing, I guess, for Austin rather than...
A women's health company called Acessa Health, led by Kim Rodriguez, great company. That was bought by Hologic in 2020. And then a few others to round that out. We sold two companies to IBM, both in the software area, StoredIQ and Graviton. And then recently, Live Oak was purchased by DocuSign. And so those are some of the great ones. Order of magnitude, we're making 4, 5, 6 times. And then with Alchemy, it's well over 11 times kind of return. So we're very happy with those great exits.
Yeah, I can see why. From an outsider perspective, somebody just coming into Austin, the VC community here has historically been dominated by a few firms, obviously including Austin Ventures. And in 2015, Austin Ventures folded. Now, in other ecosystems, losing an anchor like that has some really negative ripple effects across the region. But in Austin, at least, it looks like the opposite occurred. We have several Austin Ventures alumni starting firms, and the vacuum was filled by both new local firms and venture capital companies moving here. What made this an accelerator event, and why was the folding of Austin Ventures 6 years ago more of a good thing, I guess, for Austin rather than a destructive one?
Yeah, it's a great question. And of course, Austin Ventures did a lot of good things for Austin and Texas over the years and made some great investments. And I have to say that I was one of them. So the first company I built was funded by them. So I have a lot of experience with them. Their focus was national. And so it wasn't primarily only on Austin. And so I think part of them coming apart allowed them, the different subgroups, to focus on Austin and Texas is one kind of key element. And I think, a lot like you'll see in business where there's creative destruction, that happened, here in that investment community. And acceleration was happening over the years as they did invest in a number of Austin companies that grew and produced mid-level product folks that could then go out and start their own businesses. So they were really foundational to things happening. And I think, like you said, because they broke apart and because others have come here, we've just accelerated this amazing ecosystem and seen it grown.
Yeah, so speaking of that acceleration, the first half of 2021 has had historic numbers. Our second quarter, we hit about $1.8 billion of investment, according to CB Insights, which beat our previous quarterly record by almost $1 billion. So that's an order of magnitude different there. And so we've already seen, $2.5 billion in funding just in kind of the first half. How are you seeing this year kind of running? What does your funding deployment look like so far this year?
Yeah, a couple of key principles there, Jason. One is that we're just running at a higher velocity. The whole ecosystem is going at a higher velocity. We were classically 3 to 4 new deals a year. Now we're probably at 5 to 6. At this point, we're making decisions a little bit quicker. We love building relationships with entrepreneurs, but in this marketplace, you have to move a little bit faster. So it's headed a little bit more toward that transactional side, but we still are working hard to build relationships there. But so basically, velocity is up. I think opportunity is up. We've been focusing on Texas. We've thought it was a great place to be in the coming decades when we started in 2005, and that's been borne out. But we also have to, run faster. So more opportunity, more entrepreneurs, lots of great folks coming from other places, and of course, a bunch of great folks being, graduating from startups here, starting their own thing. So it's just a kind of a virtuous cycle accelerating the growth.
I think the migration has obviously been a big thing that, is kind of talked about a lot. And so you said you see people graduating from startups here and kind of doing their own thing and people moving. Right now, at least in this year, we'll see how it kind of goes. How much would you say is kind of that recycle of Austin into Austin that you guys are funding versus people kind of, or at least Texas overall, versus companies that are moving here or entrepreneurs that are moving here? Is it, still 80-20 Texas born and bred, or is it kind of being a little more balanced?
Well, it's hard to get specific numbers. These would be purely speculative guesses, but I would say, 2-3 years ago, it felt like it was very highly Texas local recycling. But with the great influx of last even 18 months, that number is probably 30%-ish on the new and 70% on the existing. But I think it's really moving rapidly. Austin, as you know, is a great place to be and live. And so the lifestyle here is attractive to others to build maybe second or third companies.
Well, one of the things that's interesting on that movement side, right? It's not just talent companies, but it's actually other, VC firms as well. We're seeing 8VC, HealthQuest, iFly have all moved here. And then just the amount of funds that are being raised in the 8 months that I've been here, you've got KDT, Revival, GigaFund, Trust, ATX Venture Partners, Sante. I'm sure I'm missing people, but that's almost $2.5 billion of new capital floating around. How are you seeing the environment changing with just so much dry powder?
Yeah, no, it's great. It's fostering even more opportunity, kind of number one. I'd say, some of those firms are nationally focused, and so they are going to deploy capital beyond this specific region, which is great. But like you said, that those are the dollars being put to work here, and so it's going to raise valuations, expectations. It gives entrepreneurs more leverage, in the negotiating. Certainly, I think that there'll be more companies here, and so you get this virtuous cycle of repeat entrepreneurs. Something may not work, and they started the next thing. So I think it's just a very positive thing for the community. And like I said, I think valuations will stay strong, and it'll continue to grow. And it's not going to fade quickly. I used to worry about Austin back in 2004 when things were getting a little slow, but there's a lot of capital here, and I think it's going to undergird the economy well.
Do you see that kind of valuations increase coming across the stages? Or are we seeing some, I always worry about, obviously, when you have creeping valuations, especially at, say, seed and Series A, that companies are able to actually live up to that when it's really the competition that's driving. So how are you kind of seeing those valuations go across the stages?
Yeah, I think you've identified a great challenge. Certainly there's generic uplift in each of those stages, but I think the challenge is, can the companies grow into those, increasing expectations? And so some of them can, and God bless them, they should keep growing. But it is something to be thoughtful about as an entrepreneur to say, do I make sure that I raise the right amount of capital at the right valuation so I can grow into it and continue to, be successful? Because I think one of the unfortunate things is if you get too far ahead of yourself, you may get overlooked, for that next round. And that can be a tough place to live.
I do think interesting also kind of historically, at least what I've heard has been, we haven't seen the really large, B, C, D rounds in Austin, right? You haven't seen that kind of those really big things. What I find interesting is just taking, say, Q2 numbers. You had $200-300 million deals, a couple of $100+ million deals. So there's a consistency in now in the size and really getting into these, unicorns and possibly, deca unicorns coming. Do you see that changing, especially now with the excess capital here, that we can have local capital doing deals of that size?
Yeah, I think that's certainly that there can be syndicate participants. I'm not sure that we yet have the capacity to lead those size deals. Putting $50 million to work in a Series B or C, as it takes a firm that's got, at least $500 million of capital. So I'm not sure we're completely there yet, but we're certainly growing there. I mean, our firm used to talk, 3 years ago about $50 million rounds being a thing. And now they're just kind of passe and it's, 100 plus. And of course, our company Alchemy raised a $140 million crossover round before going public. So we're getting to experience those things kind of firsthand. But I do think, Jason, that they're coming, and it's going to, just like it's been reflective in other parts of our economy, there's a value to these private companies getting bigger kind of privately longer before they get public. And so I do think that those will become the norm over time.
Oh, that's great. And it'll be interesting, of course, when they go public and having the capital recycle, and then you have those kind of big public companies as well, like Bumble being, and Disco being great examples.
Great examples, yep.
One of the things that we found great about since moving here is just how collaborative Austin is. And my question to you is, how is that really translating over to the VC world? Are you seeing kind of this great integration between the established players and the new to Austin? Obviously, the worst case scenario you can see from all the migration is having almost two different ecosystems kind of running in. Now, I can speak from myself that it's all been very welcoming, but how are you seeing? Are you seeing syndicates kind of across the board? What's going on?
Yeah, I think very collaborative is a good word. That's been historically the way Austin and Texas have been. They've been welcoming of new entrepreneurs and new investors, and I think that can and should continue. We've historically, with some of the longer term funds, been co-investors with them, had a number of good exits, like Favor would being one of them, as an example, co-invested with another firm. And so we're oriented that way as a firm at S3. We want to be collaborative with the group. I think it'll take a little bit of time for the new folks to kind of fully integrate in, but we're hoping that that'll work with them, and looking forward to co-investing. You've seen it already with some of the firms joining investments here in the area. So I think it's on the right trajectory, and I think that collaboration will continue. We certainly welcome it.
One of the interesting things about kind of the collaboration doesn't just happen obviously at the people level, but kind of across the sector level, right? So something that's been great in Austin has been this explosions of new sectors. We're not just a semiconductor or enterprise software, but we see CPG, space,